and gentlemen, good day and welcome to the Epack Durable Q2 and H1FY26 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note, this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you and over to you, ma'am.
Thanks. Good morning, everyone, and a warm welcome to the Q2FY26 earnings call of Epack Durable Limited. We have the management today being represented by Mr. Ajay Singhania, Managing Director and CEO, Mr. Narayan Lodha, Executive Director and Group CFO, and Mr. Rajesh Kumar Mittal, CFO. At this point, I'll hand over the floor to Mr. Narayan Lodha for his initial remarks, post which we'll open up the floor for Q&A. Thank you and over to you, sir.
Thank you, Bhumika. Good morning, everyone. I am Narayan Lodha, Executive Director and Group CFO of Epack Group. I warmly welcome all of you to our Q2 of financial year 2026 earnings conference call. The Board of Directors has approved the Q2 of financial year 2026 result on 4th November 2025. And I trust you have all had the opportunity to review them. Epack Durable is India's second largest ODM for room air conditioning. We are consistently executing our strategy to diversify beyond core RAC into higher growth categories, namely small domestic appliances, large domestic appliances, and component business. Joining me on the call today is Mr. Ajay Singhania, our Managing Director and CEO, Mr. Rajesh Kumar Mittal, our Chief Financial Officer. They will take you through the details of our operational and financial performance for the quarter. Thank you. With that, I now hand over to Mr. Rajesh Mittal, our CFO, to take you through the key financial highlights for Q2 2026.
Thank you, Narayan. Thank you. Good morning, everyone. Welcome to our earnings conference call to discuss the performance of second quarter for the financial year 2026. Let me first thank you, our host for today's earnings call, DAM Capital Advisors. Now, let me give you some of the key financial highlights for the quarter and for the first half year ended for the financial year 2026. For the second quarter under review, our revenue from operations stood at 213 crore rupees, which declined by 43% on quarter-on-quarter basis. The EBITDA was 0.5 crore rupees, which declined by around 95% on quarter-on-quarter, with EBITDA margin reported at 0.23%. The net loss for the quarter was around rupees 22 crores. For the half year ended, revenue from operations stood at rupees 876 crore, which declined by 24% on year-on-year. The EBITDA was rupees 56 crore, which declined by around on year-on-year, with EBITDA margin reported at 6.44%. The net profit was around 0.6 crores. Now I would request our Managing Director and CEO, Mr. Ajay Singhania, to brief you on the operational highlights. Over to you, sir.
Thank you, Rajeshji. And once again, good morning, everyone. The second quarter of FY26 continued the muted journey for RAC with an overhang from Q1, primarily due to unseasonal rains and especially the time gap between the announcement and implementation of GST rate reduction on air conditioners from 28% to 18%. So as there was an overhang of inventory from Q1, this definitely impacted the sales and production in Q2 as well. But thankfully, the second half of Q2, especially the end of September, saw some cheer in the market with AC inventories getting liquidated and channel inventory being offloaded. However, post-implementation of GST, we witnessed this rebound for a shorter duration, especially during Navratri and Diwali, wherein the surge in customer demand pushed AC sales and also pushed liquidation of inventory from the brand warehouses. Over the past few weeks, inventory levels have definitely come down and channel movement has improved meaningfully. We expect this movement to further continue through the current quarter, thereby driving the demand and with enhanced affordability, improving customer sentiment and healthy underlying demand. For a segmental perspective, our RAC segment witnessed a decline of 76% quarter-on-quarter basis for the reasons I stated just. However, other segments demonstrated strong momentum. Our focus in diversifying our overall revenue, the three pillars of small domestic appliances saw a growth of 45% quarter-on-quarter, led by healthy order inflows across both existing and new products, particularly with encouraging demand of air fryers. Our component segment, the second pillar, also saw a robust growth of around 73% quarter-on-quarter, supported by a solid order pipeline of different components for non-AC products. Our LDA segment also reported a significant 466% growth quarter-on-quarter, driven by our continued focus on expanding the customer base. Notably, our product business contributed 79% of the total operating revenue during quarter 2, reaffirming our customer confidence in core offerings and highlighting strong market adoption. In line with our strategy to scale and diversify, we also took a significant step in broadening our component segment. This diversification is a deliberate move to reduce concentration and position us in adjacent high-growth industries. We see this a long-term growth lever that strengthens our portfolio and opens new opportunities across sectors. We remain committed to long-term value creation through strategic capital investments aimed at expanding capacity and supporting our diversified growth roadmap. By end of quarter 2 FY26, we made steady progress across multiple key locations. We incurred approximately 129 crores of capex in Q2 FY26, primarily directed towards capacity expansion and equipment installation. Our basic infrastructure and building is now ready and we are putting up the plant. These investments, along with the upcoming City facility for Hisense, growing customer engagement post-implementation of GST cut from 28 to 18%, we have witnessed a strong rebound in demand. The festive season, particularly during Navratri and Diwali, saw a surge in customer durable sales, especially air conditions, and expecting the momentum to continue, we firmly believe that H2 would see a rebound in the growth of AC industry overall. The continued expansion of product portfolio positions us well for the future. With a strong foundation in place and focused execution, we remain confident in achieving our full-year targets and sustaining healthy revenue growth going forward. With this, we now open floor for Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah. Yes, thanks for the opportunity. Sir, two questions. Obviously, Q2 was impacted, but how do you see Q3 considering many companies have called out that October was also a soft quarter because generally there is a mini summer or October heat, but this time we have seen monsoon remaining in, active in many parts of India. So there is probably weaker start to the quarter Q3. And secondly, the inventory also needs to change by end of 31st December, considering the change in BE norms from January. So how do you see Q3 likely to pan out? That is question number one. Question number two, if you can indicate the guidance for this year, FY26. I guess earlier call you had alluded to around 30% revenue growth this year. So how should we build on to that now in the model? And last question, in terms of any update that you can share on Hisense as well. Yeah, that's it from my side. Thank you.
Thanks, Anirudh. I think very relevant question under the current circumstances. Obviously, like I started sharing, the GST rate cut and the cheer which it brought to the market was kind of very short-lived, lasting probably only for 2 weeks or so. And beyond it, obviously October, we didn't see much uplift in the market sentiments. So the GST rate cut could only promote, it definitely helped liquidate inventory in the channel to a certain extent, but not as high as expected. So there has been definitely reduction in the overall inventory levels in the trade, and we saw some movement in inventory from the brands again to the secondary market. But it was short-lived, and yes, definitely the beginning of Q3 seems to be kind of muted. So my current sense guides me that overall FY25-26 for the industry at best could be a flattish kind of a year for the AC industry. And hence our efforts into diversifying, I think, will play a very critical and important role for us to drive growth for the current financial year. So as we can see the uptick in our SDA, LDA and other categories, we firmly believe that this will continue to grow, and AC at best could be flattish for the industry, and we could see similar kind of status even for Epack. So our revenue guidance, if we talk about for the current financial year, will continue to grow with our diversification efforts, and for the projections about the AC growth, we keep our fingers crossed, still looking at the kind of RFQs which are coming into the industry. So overall, calendar year 26 definitely seems to be very promising with all this, but yes, definitely the BE upgradation and all this are definitely jeopardizing the current H2 growth as well. In terms of the update on Hisense, the new facility which we are putting up dedicatedly for Hisense is now completely ready. And the trial production and all the licenses and approvals have been received, and we are planning mass production rollout towards the end of December, first week of January, when we plan to start the mass production for the Hisense air conditions.
Okay, sure, understood. So and I guess the price hikes which we may need to take will be in the range of 7 to 8% for RAC from January to comply with new norms. That's right?
So again, on the price hike side, there are going to be two impacts in the coming season. One definitely is that compared to last season, which abruptly ended in March, April, the dollar rate has gone up. The commodities, especially copper and all, have almost increased by 15 to 20%. So that is one which will definitely lead to price increase, and on top of it, the BE rating upgradation will also have its own impact. So yes, anywhere between 5 to 7% is definitely the increase on the cards, which will set off whatever benefit was passed on in terms of GST reduction.
Okay, got it. So, and last question, I guess the PLI benefit that the industry is getting, it's still end of FY27, that's right, no? So post that... sorry.
Right. So this year is the fourth year for Epack to accrue PLI benefit, and then FY26-27 will be the last year for which the amount will be received in FY28. So the 5-year window for the PLI will be ending in FY26-27.
Okay, so most likely the industry will have to take one more round of price hike again beginning in FY28 to manage the market.
Yes. Yeah, hopefully yes.
Okay, sure, sir. So this is very helpful. Many thanks, sir.
Thank you, Aniruddha.
Thank you.
Thank you, sir. The next question is from the line of Tanay from DAM Capital Advisors. Please go ahead.
Hi, sir. Good morning. Thanks for the opportunity. Sir, my first question is, given you mentioned that obviously the inventories did sort of liquidate to an extent at the channel level, what would be the current inventory levels, let's say, between channels and brands currently?
So, Tanay, again, these are just estimated figures. We believe that the channel inventory at the end of Q1 was roughly around 5 million, with almost 3.5 million in the channel and close to 1.5 to 2 million with the brands. So, at the end of Q2, we believe that this inventory has come down to the level of almost 2.5, 3 million. So, it has almost reduced by 50% or so. So those are the estimated numbers, what we have kind of put down in our discussion with most of the brands. So the channel inventory has definitely reduced almost 50% in the last quarter.
And so that would broadly be, let's say, around 2 odd million with the channel and remaining 1 million with the brand. Would that be a fair split?
Yeah, as a rough estimate, that's what numbers could look like. Maybe 1.7 million with the channel and another 1 million with the brands put together.
Got it, sir. So my second question is, given that the BE rating is on cards, let's say Jan onwards, are we seeing any sort of new RFQs turning into orders this quarter onwards, or is that yet something which is not common given that we have to liquidate the old inventory yet?
So, Tanay, here's something interesting is there, especially since the BE rating is getting implemented from 1st of January, and it is not necessary for the channel can still carry the inventory from the previous star-rated products. So, we see a unique mix here since the price increase on the 5-star products is going to be much more as compared to the 3-star product. A lot of brands are continuing production, especially of the 5-star products, with the current BE rating, and which they probably want to market or sell in the upgraded situation. So one, in the current quarter, we will see a lot of 5-star getting produced. And secondly, yes, most two brands are also starting production of the new star-rated products from mid of December onwards.
Okay, sir. So my next question is, let's say in terms of SDA, right, we've seen very strong growth, and obviously it's got to do with the fact that one bit is the air fryers picking up pretty well. But what are the other key products which is doing well for us? And if you could give any color in terms of, the breakup between the products, and how was this demand a lot led by festive sales? And if yes, is it yet sustaining at these levels going forward as well?
So for the SDA category, Tanay, yes, air fryer definitely being a new category, we saw a significant movement, and with us, Epack associating with most of the larger clients, this definitely has been a remarkable ramp-up of operations for the air fryers. But together with air fryers, our other products which we have created the lineup like vacuum cleaners, coffee makers, infrared cooktops, Nutri blenders. So almost all the products have either started production towards the end of Q2 or current month we are seeing the productions being ramped up. And as committed earlier that we intend to add almost close to 15 new customers, 5 were onboarded in the last quarter, and another 4, 5 are getting, we have already received the approvals and are in process of getting onboarded. So with the continued focus on SDA, we see that this growth momentum to continue further. And as we are adding new product lines, the overall SDA will continue to show a strong growth momentum.
Got it, sir. And so just if I could ask another question in terms of working capital, right? It's seen a significant increase in H1. So, what is the expected working capital position and let's say the debt position which we expect at the end of FY26? If you could give some flavor on that. And just one more last question in terms of the component PLI, given that we started seeing some sort of approvals coming through from the government, are we planning on doing anything for camera modules? And if yes, would it be for mobiles or auto?
For the working capital, Tanay, since we were carrying huge amount of inventory overhang from the Q1, definitely those inventories converted into paid inventory for us as we marched through quarter 2. And since there was no movement in the finished goods, definitely the working capital increased, and hence our inventory days have also increased. So as you can see in the presentation shared, one is the increase in the inventory days, and second is the reduction in the payable days, which means there was no new purchase. All the old purchases are already paid off. So that is something which has impacted the overall working capital cycle. Now, within the current quarter and going forward, as this industry starts liquidating, we will see definitely improvement in the overall working capital cycle or days. But again, to achieve something what we did last financial year would be difficult, since the inventory has already impacted a lot during the current H1. Anything, Rajesh, you want to add to it?
And when this, as you rightly quoted, you have seen the results also. Then this working capital, as MD sir has also mentioned, this working capital, there were two type of jumps in the loan this time. One is the working capital requirement, that is because of the inventory lying up in the books, and we have paid our suppliers on time. This is why there is some jump in the working capital requirement, and some part of the term loan which has increased, because you see that we have made some amount utilized some amount in the capex in the first quarter and second quarter, around 160 crore, out of which around 70 crore, around odd number, we have utilized out of our IPO proceeds, and some amount IPO proceeds has been utilized mainly for building, and some for capex like plant and machinery we have utilized for our subsidiary against the term loan.
Basically, Hisense facility, the term loan is being used for our Hisense facility, which is now ready, and now we are putting up the plant and machinery. So that's why for this quarter, consolidated basis, you are seeing some jump in there.
In terms of second question regarding component PLI Tanay, so in terms of which is called the ECMS scheme, the Electronic Component Manufacturing Scheme. So at Epack, we had formed two new entities, Bumjin Audio Products Private Limited and Epack Components Private Limited, of which the components, we would manufacture the electronic components. The Bumjin Audio Products intends to make components of audio components like TV speakers and microphones and all this, for which the facility is currently under setup. And the second, Epack Components Private Limited, again is a new facility with greenfield facility targeting certain other components allowed under this scheme, for which the construction is ongoing, and the set of components to be produced there, we would share in the upcoming quarters as we enter into certain strategic agreements with them.
Got it, sir. So just wanted to understand the net debt position or the debt position at the end of this year would be helpful, given that, the working capital and the term loan has sort of increased. Just wanted if we could get some flavor on that. Thank you.
This, you see, our total borrowings in the books is around 680 crore or so, and we are having around 126 crore around money in our books. So net debt would be around 500 crore or so.
Thank you, sir. Thanks.
Thank you. The next question is from the line of Rahul from PNB MetLife Insurance. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible enough?
Yes, sir.
So, sir, the weather has been, erratic this year. And
can you be a bit louder?
So, can you come closer to the mic?
Sure. So, sir, weather has been erratic this year, and there is also a case of La Nina this year. So, to what extent can the demand be impacted, and how are you planning the inventory given the La Nina and rating change here?
So the unseasonal rains and the erratic behavior of the weather definitely has impacted the overall AC demand in the country. Based on the industry estimates, we see that overall industry has degrown to the extent of almost 35% plus till end of quarter 2, and similar kind of degrowth is also seen in the numbers shared by Epack Durable. While we see definitely some rebound in demand in the upcoming 2 quarters, overall it is expected that at best the industry could end up being flat as compared to the last year, or possibly there could be some degrowth. So this entire 35% kind of a degrowth for the current financial year seems quite difficult to achieve towards the end of the fiscal year FY25-26. But keeping fingers crossed, we expect overall level the industry to end somewhere being flattish at max.
Okay, sir. Sir, my second question is, so to what extent have you backward integrated in terms of components now?
In terms of backward integration at Epack Durable, we make components by value to the extent of almost 65-70%, which includes components like copper parts, printed circuit board controllers, PCBAs, cross-flow fans, BLDC motors under our subsidiary Epack, all plastic parts, sheet metal parts, everything. So technically, if I talk in terms of large component, except compressor, we make almost all the key components in-house. So that's almost 65-70% by value of components are being produced under a single roof at each of the facility.
Sure, sir. So thanks a lot. Thanks a lot for the opportunity. And all the best.
Thank you. The next question is from the line of Arshia Khosla from Nirmal Bang Institutional Equities. Please go ahead.
Yeah, hi. Thanks for taking my question. So my question is on the LDA and SDA segment. Any new client additions that we've done in Q2? And for the LDA, what products are seeing, what products have seen that growth?
Thanks, Aisha. For the LDA and SDA segment, we have diversified our product portfolio. We have added newer products in this fiscal year, like air fryers, and then we've added coffee makers, and going forward we are adding Nutri Blender and other products. So in terms of new customer addition, we have added several key new customers like Group SAB, V-Guard, Linklock, Flam, Nook, American Micronics. So there's been an addition of at least 6-7 new customers, of which 4 or 5 are really big and significant customers. And then the opportunity to cross-sell to our current existing clients, whom we were earlier supplying only the induction cooktops or the mixer grinders, the newer categories, whatever we are adding are also getting sold. So this all is helping us ramp up our product categories. As we are adding up more categories, we see our relationship with the existing customers to grow further. So that will help us increase our wallet share with these customers. So this definitely remains a key growth driver for us. Similarly for LDA, we were making especially coolers. So in coolers also we see a definite growth coming forward. Our air coolers with both Symphony, Voltas and Bajaj continue. Although being a cooling product, there was an impact on cooler sales as well. But then our production is ramping up and we are adding a newer line as well. So there again we see the continued momentum, and we are also in talks with certain other newer clients to increase our customer mix for the LDA categories. So in LDA, we also have the washing machines, the top-load washing machines, what we started in the beginning of this financial year. So therein now the growth has been kind of, or the production has not been significantly ramped up in the last 2 quarters, since it took much more of approval time than expected or anticipated by us. But by now, all the approvals are in place and certain key new relationships have already been established. For further, the field trials with almost all the key brands are completed, all the reliability is done, and we are seeing a ramp up in production as we currently talk.
Thanks, sir. That's helpful. And secondly, on the new BE norm changes, so have the brands started placing orders for the new products, and have we started the production on that?
As far as new BE products or air conditioning is concerned, yes,